Well, yes, packaging stocks is in focus. The important industry triggers being firstly, they are able to maintain 20 plus margins despite price hikes seen in the raw material prices, as they actually follow an immediate pass through of the cost. Apart from this, there is also a short term supply happening which is actually impacting the stock prices as well. And going ahead, the demand which was anticipated earlier has actually offshot the estimates by almost 2 to 4% as per the industry estimates. And also there are tailwinds happening in the packaging sector post COVID, especially for sectors like FMCG, pharma and e-commerce itself. And lastly, there might be a possible industry re-rating if you see a private equity player like Brookfield acquiring 25% stake in the packaging business of Jindal Poly. Now, if you see the 1 to 3 year returns chart, a strong set of numbers have been coming in for returns for Nahar Polyfilms, even Uflex, Jindal Polyfilms and Polyplex on a 3 year basis, where stocks have returned between 400% to 1400%. So that itself has been a multi-bagger, you could say, for this sector itself. And if you're going ahead for the Indian packaging industry, they are expected to grow 27% on a compounded basis, targeting a 205 billion market by 2025. And lastly, there are certain risks involved as well. Industry experts do suggest that the risk reward ratio is not favorable for the industry right now, and the valuations do remain high. The packaging segment has actually seen more interest from the paper industry as well. And lastly, the margins which the packaging companies are enjoying may not sustain in the long term. Now, if we did check out the EV EBITDA multiple of major companies like Cosmo Films and even Polyplex, which are actually trading at a premium to their 5 year EV EBITDA multiples.